Well, hello, folks. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, live. Actually, not live anymore, broadcast, or at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. You can catch it there, anytime, any place, anywhere, on any device. And I've had some feedback from others, concerning, sometime back we changed the format, and that I put this out at or before 8 o'clock Eastern Time. Used to be live at 7, and the reason for the change was to create a better show that I could prepare for a little bit more, and B, to give you the same material that I was giving you before, but in a higher quality format, because in the live case I couldn't do it with a high quality format, but now I can. And that's that. So let's take a look at these markets, see what they did today. We actually had a down day today, like we did last Monday. Same sort of scenario, actually. 1 week apart, down days. Dow was down about a little over 0.5%. NDX 0.75%. Same with the composite. The SPX the same. Once more, this is wrong. It shows the Russell is down 0.49, but that's really not quite correct. It was down about 1.3. So the Russell was the leader on the downside. We had gold spike up, and this is actually an interesting scenario here, and we'll get into that as kind of the part of the main events here. But oil cratered again, down $1, on the USO. That's 4% loss again today on the oil contracts. The odd part about that is that the dollar lost as well. Nothing big, but down. Couldn't rise, which has been the case. Bonds rose significantly, over 1.5 points, which is a huge move in the bonds. And then gold, of course, with the dollar not being able to rise, gold rallies. And so you had this kind of a weird situation today, primarily as a result of the dollar pulling back. But by the end of the day, actually the FXE was starting to head down again, which is the euro. And the dollar actually cut its losses as a result of that. So, strange day, down day. What does it mean? Let's go take a look at the charts here and see what kind of a scenario we have. So, the first thing to notice is that there's been a range building up. And that range is primarily located right here at the top, about a 5-day range. And if we draw in, well, actually on the S&Ps it's wider. Let me get here we go. Well, maybe I'm not. I see. Okay, here we go. Sorry. So on the S&Ps, if we go back to this was kind of the breakout area here. And what do we got? About 10 days range off this prior range, which was down here. Now, this range has been in effect for 10 days. The width of that range at this point, if you were to break and head lower, right, you'd get about an equidistant range, which would take you back to about 2020. 2020 takes you back into the swing point high and actually gets you back under this little ledge that took place, a month ago or 3 or 4 weeks ago. So that's kind of the danger here if this thing actually does break down, and because they're going to be range trade breakdowns if they break down. So far, just like back here, so far it's just consolidation. There was a little volume pickup, just like there was volume pickup last week. It's into probably the middle, actually a little bit. It's so tight up here given this huge run. It's so tight up here that it's hard to see, but you kind of have two halves to the range as usual. You have the top and the bottom half. It's kind of in that bottom part of the half. I think tomorrow is going to be kind of a key day, not because of the S&P, but because of the composite and the NDX. So let's pop those up and look at those. Again, same scenario. You've got about a 10-day range taking place here. And if this breaks, you would expect about an equidistant move below. Now, this one gets more interesting because here on the composite, we've actually built up some swing point lows that are about where this thing's going to want to move to. So on the composite, it really depends on how you want to measure the range. If you measure the range of just this 5-day range instead of this little peak top, then it's a little different because it brings you right down into the support. And this is actually the range I think that you should be measuring against, this bar, this breakdown bar, because it tested that breakdown bar 2 or 3 times and couldn't get over it. It actually tested it 4 times, including today. Breaks back under it. I would expect that to trade back down to the bottom about the equidistant, which is going to bring it right to the support zone and just right at those swing point lows. And if it were to set another one there, in other words, it moves back up over time, then you've got a bunch of swing point lows starting to form here, and eventually you're going to see some swing point lows form on the weeklies, which so far there are none. If I pull over the weekly and show you that, there's just nothing up here yet. You got a low here, count 6 ahead, 1, 2, 3, 4, 5, 6, right? So these bars are the ones that are going to set the lows if we're going to get one up here. And you can see just how strong this move has been. But the key here is you've got some swing point lows that are lined up. If you come down, you start breaking them, you can get a faster move down off of that, and that would push this thing back down even farther, but I suspect this range isn't going to go that far. Russell, just doing a big range trade itself. It's up in this big range, has been there for a while. Now this one is actually has 2 nice divisors in it. They're both equidistant, right? If you get a third one and it breaks again, you can expect it to come back to the bottom of this bar. So if we see the index break, SPX start to break its range, I suspect this one's probably going to break its range too, and we're going to get an extension to the downside. So we're starting to see at least the formation, at least the possibility of some weakness coming into this markets. But it's just the beginning. I mean, we don't have enough yet to even know if it's going to happen. All we have is the setups starting to form to tell us that that possibility is actually there. That's on the indexes. If you look at the sectors, a lot of divergence in the sectors. The indexes are now at least all starting to range trade. They're all doing the same thing finally. But you don't have that in the sectors. And that's the piece that if you're wanting to know where this market's going, you'll want to watch and see what happens to the strong and the weak in this this sector universe. IBB, which is the biotechs, big spike up. M&A taking place today, merger acquisitions. The SOX had been moving up, came off with a little volume. The IYT comes off, breakdown bar, goes up, test, can't get over it. Now it's coming down, it's going to test it again. This is a range trade. So you have that same exact sort of range trade we were just talking about. You got the same thing set up here, right? A break of that takes you all the way back to the swing point high and that support zone that's sitting down there. If you look at the XLE, which was the big move today off the oil, XLE finally, now this is the integrateds, right, the large caps, they finally break the swing point low. It's been setting up for a while. The big question here is, will you see an immediate bounce? Will this thing come right back? Or is this really just the beginning of an even larger move down on what is now an ABCD structure to take this lower? That's a big move down if it happens in the integrateds. That's going to hurt the Dow because your Exxon, Chevron, they're both in there. This is a potentially a bad situation, and if you, it's kind of hard to to think of this with a market as bullish as it is. But if we come over and we do an ABCD structure here, this is a massive ABCD structure to the downside. And it's hard for me to believe, or we're halfway in it, right? It's hard for me to believe that it would extend that far. But that's the setup if this thing keeps going. And if you're going to stop it, usually you have to stop it fairly quickly. Otherwise, it gets rolling. So tomorrow will be a key day. Probably the next 2 days will be key days, because you want to see if you're bearish, or even if you're bullish and trying to decide if you stay in or get out. You want to see this thing extend if it's really going to happen, or if it bounces here, then you finally put in some sort of a low. The ideal case, of course, would be you go under it in the morning, back over it, and get back inside that B point. In this case, 78.68. Now, if we look at other sectors, which we don't cover here that often, but like OIH, the OIH is in a totally different world, right? It had a range trade breakout from here, and it's just about extended it now. So if I draw it in this way so we can see the numbers, you had the range here, and if you do equidistant on it, you're there. So I'm wondering seriously if we're going to start seeing the bounce in these as a result of the range trade projection having already met, versus an extension down as a result of the XLE breaking. So that will be something closely to watch. Going back to the positive, XLF breaks, keeps going. There was a question last night about Citigroup. Actually, I put in the wrong symbol. Let's put in Citigroup. And yeah, it didn't come back in. He went over it, 21. Question was, would he get a retrace? And I said you might not, as a result of the fact that you had the case here is you had Citigroup multiple swing point breaks, multiple time frames, and a lot of times that just doesn't give you the retrace when they happen, especially in a bullish market. If I go elsewhere, healthcare strong. Look at one more weak one here, XLK. This one's already broken the range. Now this may be the precursor to something larger, in that now if we take the range from there, it's right at the cusp. If we take the range like we did on the NDX and the comp, it's actually underneath it. This one, XLE, XLF, I'm looking down the list here, those are the key sectors tomorrow to keep an eye on, because those will be the ones that tell us most likely if we're going to get a range breakdown on the indexes themselves. World markets, really not much different there, about the same. We haven't seen anything. You got Europe still hanging at the highs basically, even with some selling today, and you have China just on fire, up 25-26% now in about 2 weeks. A ridiculous move to the upside there. Let's pop over. I want to pop over while I have a little bit of time and look at the OX markets in particular. I want to look at that oil market. If we go to the oil market and we pull it up on the daily, you can see the break. I'm going to pull over this monthly. Look at the magnitude of this loss on a monthly. Look at all these swing points that have come, down here at the low. That just tells you how much resistance there's going to be when this thing finally does lift. And the other thing that's kind of fascinating is if you think about oil, oil's down something like 41% now in 5 months, 6 months. Gasoline, same. I mean, gasoline has gone from, let me pull up the monthly here. Gasoline's gone from 64 to 40. I mean, that's a 38% drop. Breaks 2 swing point lows here, escalates. Breaks 2 more, escalates again. This is a huge drop. You can see the difference in the spread, whereas the oil's down 41, gasoline's down 37.5. What does that tell you? Well, the refiners are probably making money, and that's going to show up in their bottom line at some point. So if you're interested, you might want to take a look at the refiners. So that's where those things are. Let's go look at gold. Gold got a bounce today along with silver. Silver, let's take it first. Silver actually acted pretty well. Let's see what gold did. I know it was up. Let's see what the chart looks like though. Okay, gold. Alright, remember we got over the swing point low back here, right? That was the retest regen zone. Got over it. That put us in a range trade there. And it's holding up pretty well. You got this spike down. Didn't quite get to the bottom here. And now you're coming back up. You got a high volume top. So gold looks like it's in pretty good shape, potentially for some more bounce. The other big mover today was bonds. Let's take a look at bonds here. This was a huge move today. 132 point and a half. It's right back at this high again. And if it gets over it, folks, it's going to try to take it to 124. So still, bonds, you know, if there's a trade that I really like, that I think doesn't have much risk to it, and that, you know, if you're wrong in terms of the timing, you're not going to get killed, bonds are kind of it. And my friend Charles Kirk would kind of draw in a cup and handle. I don't know that I'm doing it quite like he does it, but you know, this is, to me, it's more like a saucer that's taking place here. But you'd like to see these rounding bottoms, you know, volumes low, and then you start seeing some poke ups. What I really would have liked to see was some volume here, like this day, you know, and today, have some volume coming into this thing as it tries to push higher. We'll see if that develops, but I still like the bonds as kind of a safe way to hedge your portfolios. I didn't get a chance myself to look at a couple other things, so let me quickly look at them. So LQD really not doing anything. Let me see what junk bonds are doing. Junk bonds making new lows. That's interesting. Wow. Doing it here and doing it on a weekly. That's potentially a break on multiple time frames. So it looks to me like you're seeing more and more divergence between what corporate issues and what the government issues, and that spread is starting to change from what it has been. Okay, let me pop over. I've got a couple viewer questions that are going to take a decent amount of time, so let me try to take those and address them. So I had a viewer. I'll take the easy one first, and that is that I've had a viewer asking questions about stocks in India, and I was looking at these today, and let me pop them into the chart here. And what I saw, or what I was thinking with them, is that it would probably be worthwhile to just show this to everyone versus just the one person. So that's what I'm going to do here. Hang on. So the company in question is Housing Development Finance Corporation. This is in India. It trades on the NS. And HDFC is the symbol. And I just put this in today so that we could track it along with some of the other symbols these guys are starting to look at. And so the question here was, you know, it had come down, and I thought it'd be useful to go over this in a live presentation. It had come down to test this swing point low, and it tested it with slightly more volume, I believe. Let's make sure of that. So the price point is 2 million, test it with 2.63, so just a little bit more. So you would expect, given that it was a hammer reversal, you would expect that it would try to bounce a little bit, comes right back up to resistance, and now it's coming back and it looks like it's going to try to test it again. Now the risk here, and these are the things that I didn't take enough time to address all of this, and I didn't have all the charts in front of me, but the risk here is that you have two swing point lows, right, and that this thing could, if it breaks that, get a little momentum to the downside. Now the swing point high was 1084, and the breakout bar, so the low, so it hasn't done a retest regen. So I suspect what's going to happen, and this was actually the crux of the question, is that if you break here, right, and get under this swing point low, you're going to be getting into the retest regenerate zone, and I would expect that that first move down into here is going to get bought. Now the other piece of information, or the other piece of the equation, is you actually have an ABCD structure that measures lower. Excuse me. So it's going to be a battle. Is do they buy it here, or does this thing, run down to the extension that it should, or do you get a little bit more? Oh, actually, I drew it wrong. There's actually a little higher here today. 1, 2, 3. Yeah, hang on just a second. No, it would have been, yeah, it is. So it's higher. So that may change the equation enough. Yeah, so it comes to there. Yeah, it's almost the same now. So it would actually take it on a little bit too deep. Full retest regen would be the bottom of this bar, and that price point's 1060. So that's the way that one shapes up. If I look at it on a weekly, pretty strong. It's coming back in for a retest regen on the weekly. If I look at it on the monthly, hasn't even came back. So strong stock. I think you're looking for a place to get into it. I think down into this area is probably where you'd want to focus on. The other viewer question is one is a little bit more involved, and this one has to do with if I had one stock to pick amongst the top 5 on a short-term time frame, which would it be? And top 5 of the NDX. So let's pop through them real quick and look at them. Apple's the first. It's the most heavily weighted. Apple's coming back to do a retest regen and to do a test of that prior low. So you got volume on this low, on this bar. There's volume on it. The retest regen is below it, and it looks to me like there's a decent shot that you can get in there. So I would like to buy this. It's an ABCD structure that takes it down into here, somewhere in this retest regen zone. Now usually you're only going to get the top after 6 bars, and this is way after 6 bars. So Apple looks pretty good around 110, 111. So that's Apple. Let's look at the next one. So the next heavily weighted one is Microsoft. So Microsoft, let's see what this one looks like on a short-term time frame. Okay, so Microsoft, this one's really interesting. So this one has a huge volume spike back here on this high. That's a retest regen zone. It's already been visited once. Now if you look at the percentages associated with these, when you come back into it and test it, you only have like a 50%, 55% chance on the second test, which is what it's doing now, to actually hold. So this one's a little bit weaker, although it's coming into a huge bar, and so I suspect that they're going to buy it again here, even with those reduced probabilities. If it doesn't, then you got a larger ABCD structure to the downside, and it measures something like that, which would take it to the bottom of the bar. So I would think somewhere around 47, that one's buyable. But just looking at that one compared to Apple right now, I think Apple's the best. Let's quickly look at Google. And I know, because I watch Google a lot, this one is not one I'd want to be buying yet. Not on a daily time frame until it tests that low. So that's not one. Let's look at the next one, which is Intel, or actually Oracle, I believe is the next one. So Oracle off a swing point high, it's doing an immediate retest regen, and if we look at that, yeah, that's not a bad buy. Got a little volume in it today though. It's probably going to try to fill that gap, and that's an immediate retest, so it doesn't have as high probability. That one's probably second to Apple. I wouldn't probably take that one over Apple though. And then let's look at Intel. It's the last one. Okay, here's Intel. Now Intel has had a huge run already, and Apple has too. So Intel has done ABCD structures multiple times on the way up, and it's completed. Look like most of them here. Actually, this one is not complete. This one's just starting. Okay, so that one has the potential for even higher. Has a big bar here, support at 36. I think the toss-up here is between Intel and Apple. Intel around 36, Apple around 111. I mean, excuse me, what is it? Apple 4? Yeah, it's 111, right? Because they split. So I think those are the two that I'd look at, and either one of those would be probably a toss-up. Okay? All right, well, that's it for tonight. I thank you for joining me on You Tell a Friend Tell Two. I'm LA. This is and it was your daily NeoTA wrap. Have yourself a great night. Thanks for joining me. Take care, and I'll see you next time.